everyone. Elke Rubach here from Rubach Wealth and another installment of Community Spotlight. We are once again with Sean Mahoney, founder of the Mahoney Real Estate Group. Hello and welcome back. How are you, Sean?
Hey, I'm well. Thanks a lot for having me again. Really enjoyed that last series, and so did a lot of people. So I'm happy to jump back in here and give some collaborative advice and see what information we can get out there of value. So actually, one of the things that after we had chatted, I had a unique situation which got me thinking it would be of interest for people. I recently had clients that they bought a condo. They had one particular, they were together, they bought a condo, they weren't married, building their life and what one particular goals. Now they've just recently sold their condo. She's pregnant and they're married, looking to buy a house. And I think that this is actually a really common thing that's happening now. And I'd love to hear what your recommendations are when you have one goal, but now you're in that next big chapter, and how to teach people or what people should be looking for to protect that next family life that they're creating.
Absolutely. So, as you know, we're fully into the holistic approach and having your advisors or your advisory table next to you when you make such big decisions. We see this day in and day out, and I think it starts with a conversation, and it's very important for people who are about to make such an important decision at whatever level of income they are. When they're going to buy a house, they need to be clear about where they're standing financially and be sure and comfortable with the decision they're about to make. So what we do is we walk them through a very simple process where, of course, we need to understand what they have and what they owe and how they spend. But it's really when you drill down into the specifics of their cash flow, or, the code word for where is your money going, that all sorts of options and opportunities come up. Because the last thing you want is for people to dive into a transaction where, it's binding and the bank will want their money back and the seller will want the transaction closed, and realize, the next day that we don't have enough and we might have met the ratios to buy the house and get the mortgage. But how is our lifestyle going to be affected? And do we have proper insurance coverage? Can we afford what we're getting? And it really is a conversation. We want to make sure that we dig deep and we ask the right questions for people to be ready to do that. And that's how we do it.
For sure. And I like that. So, obviously more responsibility, family, life dynamics is totally changing. You want to make sure that now you're protecting your family. You've got a little one on the way, the bigger home, which usually comes with a bigger mortgage. What are some questions that people should be asking, or what are the the goals when you're sitting down with them? What are the goals that you're looking to achieve with them? Is it long term? Is it short term? Is it how they protect their assets, the financially family? I guess my question is, what are questions that they should be asking you?
When it comes to goal setting, it's a really personal and family-based decision. So it really depends on how the conversation goes with a unit, whatever you want to call it. And to me, the art is being able to infuse flexibility into whatever they're planning, because we know things change. And when people are fixated on buying an asset, be it an investment, be it a house, be it whatever it is, normally they just have that object in front of their face, and that's fine and fantastic because it's their immediate goal. But our job is to show them what can happen when things go really well, when things go bad, when the investment doesn't perform the way it was supposed to. We talk to other experts, and we bring people like you to tell them, if you're buying in this area of Toronto and the real estate market were to drop, well, this area might drop less Now, are you planning on staying here for 5 years, 10 years, forever? Are you going to renovate the house? How long are you going to keep it? It's kind of like expanding the conversation to get them out of the immediate goal of, I bought a house, I have a mortgage, and I have insurance on it. It's more the, okay, yes, but what happens next? What happens if, your house and everything goes well, but what happens if you lose your job? What would you do? What are the options? And so we try to ask questions that are not necessarily comfortable or things that you want to think about. But the last thing is for those situations to happen and never have thought about it. So it's the need for flexibility and long-term thinking, even if it's a short-term decision that they're making.
Yeah, I love that. And what I hear from a lot of that is don't be scared to be vulnerable. No question is a silly question, and it's probably better to get that question answered than if something unfortunate happens where they didn't ask the question and they weren't covered, or they weren't protected, or maybe their real estate needs to change, or their financial goals need to change. So that's what I'm really hearing is ask a lot of questions, be vulnerable, and ultimately that's the only way you can tailor it. What about on the flip side, like you were talking about, raising the family, goals, how long are you planning to be there? What about the flip side? I work with a lot of downsizers as well, and they're selling their family home, they're empty nesters now. In many cases they have a plan, or maybe they don't have a plan. But they're looking to get to that next level. How do you approach that, and what are the important things that one should be asking or considering when downsizing their property?
I mean, at the end of the day, when you have families and families that have children, like in my case, I've had kids, and everything you do it ultimately for them, right? So the questions we approach them with is really, have you thought about your legacy? How are you going to pass on these assets? Have you thought about the tax implications of your transactions? Is there a better way of doing it to make sure more money stays within your family as opposed to sending it to Ottawa? I mean, money, you can only do two things. You can spend it or you can give it away. And the giving away can be to your family, can be to your cause, or can be to Ottawa. And you have to pick two. And if you don't plan accordingly, Ottawa will be the first one in line. So if people are okay with that, it's an informed decision they're making, and we've done our job. It's also facilitating the conversations with the next generation to see if that generation is at all interested in inheriting anything from the parents. And it's not, you would think yes, but it's not always the case. And if you add to that the complexity of a potential business in the family, well, that's a completely different conversation, because there's potentially the need to equalize the siblings with an inheritance, or maybe not, but at least it's having the conversation with the siblings and saying, you're not getting anything, but at least they know, right? What people usually want is to keep harmony in the family and the siblings talking to each other. So again, like in the case of the newlyweds, everything starts with a conversation, and people being open to asking questions and not being shy. As you said, vulnerable is the key word. And ask the right questions and allow us to help them ask the questions that they haven't thought about. Because very often we see people who have gone through life buying stuff and really good financial instruments and really good investments and a bunch of things that just overly complicated their financial situation, and they don't even know what's going on or how they interact or if they're tax efficient or not. And what we want to do is bring everything together and allow them to understand the implications of their decisions and the consequences of each instrument that they've added to their life. And in some cases, they all make sense, that you just had to clarify it. And in some cases, they don't need what they got. So, or the value of that product is no longer there. So it's making sure that people have what they need and need what they have. So we are the ultimate simplifiers of financial lives. And when it comes to succession planning and empty nesters, it's a very emotional conversation that people have first in their heads and then expressing it within the family. And what we try to make it is as matter of fact as possible without ignoring the need for empathy. So it's an art. It's an art.
Yeah, most definitely. Yeah, and you can tell, and it's very. I mean, every case is different. Every client is different. Every situation is different. And I really appreciate all the things that you've brought to the table in that. I hope that people watching this have seen a lot of value in terms of the real estate side, and there's a lot of things to consider when you're looking to move up or move down. And certainly happy to answer any other questions. And Elke, appreciate everything. As always, you're a fountain of knowledge, and things start with conversations, what I hear, and asking questions. And if anybody else out there for our other series, you feel like there's a question you'd like answered, or a new part to the series, please feel free to reach out to either of us, and we'd be happy to answer any questions. And thank you for having me on again. I appreciate it.
Absolutely. And just to our listeners and viewers, let's give them a little bit of a bit for the next session. We're going to be talking about, how people are moving out of the city. We're going to talk, and Sean will address the good, the bad, and the ugly. So if you have any questions on that topic, please, or any other topic that you would like to hear more of, be it real estate, be it financial planning, asset management, investments, insurance, whatever you want to hear of, just drop us an email, a line, and we'll gladly address it. So Sean, thank you very much. Keeping it short and sweet. Talk to you soon. Have a good one.
Bye now. You too. Bye.
Bye.